Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Thursday, January 15, 2009. Japanese machinery orders fell by a record 16.2% in November, doubling the decline expected by economists. Records for this index go back to 1987. Companies are cutting back on purchases in the face of a deepening global recession. The weak result pressured Japanese stocks, with the Nikkei 225 stock average down 4% in the aftermath of the release. The prices that Japanese corporations pay for goods rose to show an annual rate of 1.1% in December. On the month, prices were 1.2% lower compared to expectations of a 1.5% decline. In Australia, the economy shed 1,200 jobs in December, a much better result than the 20,000 drop expected. Still, the unemployment rate inched up to 4.5%. Digging into the data, the somewhat positive release was masked by a conversion of about 43,000 full-time jobs into 42,000 part-time jobs. We've been following the Aussie-Yen pair this week as a measure of carry trade sentiment. Today, we saw the pair fall to a new weekly low around 58.20 in the Asian session, but then rally overnight and again in the New York session. The price action the last two sessions is a stark contrast from the fall we saw to start the week as the risk aversion dominated. Still, we may be just in a pause or consolidation period before the yen continues gaining again. Turning to Europe, German consumer prices matched preliminary estimates for the month of December, showing a 0.3% increase on the month, with the annual rate falling to 1.1% compared to November's 1.4%. The final version of consumer prices for the entire Eurozone also matched its preliminary estimate, showing a drop to an annual pace of 1.6% from November's 2.1%. On the month, prices decreased 0.1%. With inflation receding, the ECB cut rates by 50 basis points to bring its benchmark rate to 2% from 2.5%, matching a record low. Policymakers do so in an attempt to slow the deepening recession gripping the Eurozone. The euro-dollar pair fell further today, extending this week's losses and bringing the pair to support at 1.3025. That is the lowest the euro has been against the dollar in about a month. In his prepared comments, ECB President Trichet hinted that due to the incoming data, which is showing continued deterioration in the economy, the bank isn't finished cutting borrowing costs just yet. The ECB's cutting campaign, however, is behind the curve, as its base rate remains higher than those in the US, the UK, and Japan. The euro-pound pair fell for a second straight day, reversing part of the climb seen in the pair in the beginning of the week. From yesterday's high near 0.9120, the pair has now dropped to 0.8960. In the U.S., the number of Americans filing new claims for jobless benefits jumped last week by 54,000 to 524,000. Numbers above 500,000 may persist as companies keep cutting costs by lowering their workforces. Today's increase breaks a streak of 3 weeks of declines in the indicator. In a positive development, the total number of people receiving benefits slid to 4.49 million after hitting a 26-year high of 4.61 million. Producer prices in the U.S. fell for a fifth straight month in December as a result of steep declines in energy and food prices. The data suggests that inflationary pressures continue to recede rapidly as the economic recession deepens. Wholesale prices plunged 1.9% in December, following a drop of 2.2% in November. That puts the annual rate for 2008 at negative 0.9%, the biggest calendar year decline since 2001. In two regional measures of manufacturing, we saw some improvement in January, though they remain mired in negative territory. The Empire State Manufacturing Index showed business conditions at negative 22.2. The Philly Fed Index, meanwhile, rose to negative 24.3 from negative 36.1, which shows a less severe weakening than that in December. The dollar-yen pair continued to trade in an expanding wedge, falling overnight to a new low near 88.50, but then starting with the European session, rallying to the 90 level where it met resistance. The Dow Jones Index was lower most of the day, testing support at the 8,000 level, but a late afternoon surge brought it back near its open around 81.70. Oil prices continued to slide today, falling below $34 a barrel around 1 p.m. Eastern Time, on concerns that the global recession will deepen in 2009. Weaker oil prices sent the US dollar-Canadian dollar pair above resistance at 1.25 in a 200 pip move to the 1.2670 area. However, the pair was quick to return to the old resistance level at 1.25, which may now flip its role and become support. The loonie is a very poor performer this week as we started the week around the 1.19 level. Overnight, Switzerland will release its producer and import prices, and the Eurozone posts its trade balance. Tomorrow morning, the US finishes the week off with releases on consumer prices, capital flows, industrial production, and the preliminary version of the UMISH consumer sentiment. And that concludes our broadcast for today. Thank you for joining us here at cmsfx.com, and happy trading.